Hi, my name is Nhyira Premium and welcome to this masterclass on the IFRSs. Now, in this series, I'm going to be walking you through the basic principles that you need to understand solving key questions in relation to the accounting standards. My objective in this series is to be able to provide you with the blueprints, the basic understanding that you require in order for you to position yourself to pass the examination. My recommendation to you is very simple, that you pay attention to listen to these principles very well and also ensure that you involve yourself in the practice questions that we're going to be going through under each of the principles to increase your chances of ultimately passing the examination. Accounting standard is really crucial when it comes to dealing with financial reporting or corporate reporting. As you know already, minimum of 40% of your exam is going to be specifically in financial reporting, going to be on the accounting standards. However, consolidated financial statement, which is a 20-mark area, has some accounting standard issues that you need to understand. Dealing with issues in relation to ratio analysis when you're interpreting the financial statements, there are accounting standards issue there that you have to also understand. So if you look at it carefully, you realize that the financial reporting exam is going to be easier for you if really you understand the basic principles. In corporate reporting, also the same thing. We're going to be having a dedicated question in the exam hall relating to the accounting standards coming from question 2 and partly question 3, 30-mark area waiting for you in the exam hall. But like I said earlier, in consolidated financial statement, dealing with business valuation, corporate reconstruction, financial reorganization, all of these issues have accounting standard implications that you need to understand. So also in corporate reporting, you need to understand that the accounting standards then become very basic for us to increase our chances of passing the examination. It is for this reason why we are doing this special series to walk you through the basic principles so you can position yourself to pass the examination. Now, in this series throughout, I'll be making a reference to the Institute of Chartered Accountants England and Wales manual on corporate reporting because there are questions in that manual that I would want to work with you with, and the structure of the way some of the things are presented there will also be my point of reference to ensure that I go through this series with you. If you have my book on the corporate reporting or financial reporting also, it's the same thing there, only that we're going to be looking at different questions outside what is available in the book so that we open you up to various aspects of the discussions to ensure that you pass the examination. So let's get into the discussion, and this is the first episode. Let me bring up my screen and let's get excited about it. So the corporate reporting or financial reporting syllabus is structured into a certain category, and this is the order in which you need to study to position yourself to ultimately pass the examination. So first, we're going to have the conceptual framework. Under the conceptual framework, among other things, we're going to be looking at how we present financial statements, measurement basis, qualitative characteristics of financial statement, and then elements in the financial statement as well as the regulatory framework. All these are covered under conceptual framework, and there are written aspects that you need to understand. Second is going to be code of conduct, because ethics has become very crucial in the ICAG syllabus. So definitely we're going to be having some questions coming in from ethics, especially if you're in the corporate reporting class. Financial reporting, sometimes the examiner may not get excited about it, but the International Ethics Standard Board for Accountants issues the fundamental code of conduct, which has been adopted by the ICAG. So we're going to be looking at the ICAG code of ethics, which is based on the ISBA code of ethics. Then we'll look at the threats to the code of ethics, and then recommended actions to mitigate or reduce these threats. So that is the second part of the syllabus that we need to understand. And then we come to evaluation of financial statements. Depending on how excited the examiner is in relation to this one, we can have the following coming up, like the importance of ratio analysis, limitations of ratio analysis, calculation of the ratios, profitability ratios, liquidity and working capital ratios, gearing ratios, and then the investors ratios. Then the last thing is going to be most important, and that is how we interpret the ratio. So what are the guiding principles when it comes to interpretation of the ratios? And we're going to be getting into that also later on. And then for those of you doing corporate reporting, when it comes to evaluation of financial statements, one aspect that is very crucial is the cash flow statement analysis, because sometimes we need to analyze the cash flow statement of a company to identify whether they are doing well. So when it comes to the accounting standards, there are a lot of the standards that you need to be mindful of. But depending on the way I'm going to be teaching, our fundamental accounting standard is going to be the non-current asset standards. Under the non-current asset standards, we have IAS 16, that is property, plant, and equipment. But when you take IAS 16 as a standard on its own, it has some standards that are connected with it in relation to the initial measurement as well as subsequent measurement of property, plant, and equipment. Now, these standards include IAS 20, that is government grant, IAS 23, borrowing cost, IAS 37, provisions, contingent liabilities, contingent assets, IAS 19, employee benefit in the initial recognition. Also, even in the initial recognition, we could have IAS 21, effects of changes in exchange rates, because if the asset was procured in a currency other than the functional currency of the entity, then IAS 21 will come to town, and we have to know how to deal with the initial measurement of an asset that was bought in a foreign currency. Then we come to the subsequent measurement. On subsequent measurement of property, plants, and equipment, we are going to be exposing ourselves to a number of standards. The first one is the IAS 36, impairment of assets. Then we come to IAS 40, investment property, IAS 12, income tax, IFRS 5, non-current asset held for sale and discontinued operation. But not only that, the second category will be other key standards that, whether you like it or not, the examiner will be bringing questions about these, and that is in relation to corporate reporting as well as financial reporting. These standards include the following: IFRS 15, revenue from contracts with customers, IFRS 16, leases, and then IFRS 9, financial instruments with its associated standards like IAS 39 and IFRS 7. Then the third category, so note that these standards are going to be crucial, whether I like it or not. Something about them will be in the exam, or either one of them will be there, two of them will be there, or if the examiner is excited, whether corporate reporting, financial reporting, all these three will be there. Then the next thing is going to be corporate reporting exclusive standards. So for those of you in corporate reporting, these standards are exclusive to you, and that is IFRS 2, share-based payment, IAS 19, employee benefit, IFRS 8, operating segment. So these are the standards that you are going to be looking at. Then we come to other standards. So there are other standards that we need to be mindful of, and these include IAS 33, earnings per share, IAS 21, effects of changes in exchange rate, and I referred to this a moment ago, IAS 2, inventories, IAS 8, accounting policies, changes in accounting estimates and errors, IFRS 13, fair value measurement. So these are the standards that we are going to really be excited about when it comes to the exams. And whether I like it or not, 5, 6, or 7 of these standards will be in the exam hall for you in relation to this. Now, note that under consolidated financial statement, there are standards, additional standards that we're going to be looking at there. And when we get there, I'm going to be talking to you about that. Then we go to the next item, and that is IAS 1. That is presentation of financial statement. This will be exclusive to the level 2 students. If you are doing financial reporting, this is going to be exclusive to you, and the examiner is going to be asking us to prepare financial statements. Note that your ability to be able to prepare the financial statement will be based on your understanding of the accounting standards, because each of the footnotes in relation to the preparation of the financial statements of a single entity will be based on the accounting standards, or would have to be treated in accordance with the accounting standards. So that is going to be very crucial for the examination. So number one, we're going to have income statement, and other comprehensive income. Alternatively, this could also be called statement of profit or loss and OCI. Then we're going to be having statement of changes in equity, the statement of financial position, then the cash flow statement. It depends on how excited the examiner is. It is either you are going to be getting a question on statement of cash flow or the statement of comprehensive income, statement of changes in equity, statement of financial position together. Then for the corporate reporting students, you are going to be having one of these guys coming in the exam hall, and that is business valuation, corporate risk construction, and financial reorganization. So when it comes to business valuation, how do we place value on companies? And that is where we're going to be looking at asset valuation method, price earnings ratio, dividend yield, discounted cash flow, earnings yield. All of these methods have their own principles, and we'll get into some of these things later on as we look at the basic principles generally in this special series after the IFRSs. Then we come to the consolidated financial statement. Remember, there is financial reconstruction there. I've spoken about that already. Then we come to the consolidated financial statement. This is question 1, 20 mark, waiting for us in the exam or on either side in respect of corporate reporting or financial reporting. Now, there are a couple of standards here that we have to be mindful of because the examiner may be setting some questions in relation to these theories in the standards that you have to be really mindful of. And that is IAS 28, investment in associate, IFRS 3, business combination, IFRS 10, consolidated financial statement, and then IFRS 11, joint arrangements. And that is also another standard that is applicable when it comes to dealing with the consolidated financial statements. Now, when it comes to dealing with consolidated financial statement, there are key principles that you need to understand, and that is knowing about the group structure, knowing about how to calculate goodwill, knowing about dealing with intra-group trading. Then on the corporate reporting side, we're going to be dealing with complex group structure, like a company has a subsidiary and that subsidiary also goes to acquire another company, or we are dealing with the same company having more than one subsidiary, and probably some of the subsidiaries are even overseas in the foreign country. How do we prepare consolidated financial statements and treat the various foreign exchange translation gain or losses that we have in accordance with IAS 21? So we have to deal with that. Then stage acquisition and disposal. And that is the idea about consolidated financial statements. And we're going to be getting ourselves into all of these things later on in the discussion. So that is what we need to understand when it comes to the syllabus structure generally for corporate reporting and financial reporting. So that is the scope of the syllabus. And in the next episode, we're going to be getting excited to start with the accounting standards and the basic issues that we need to understand. Thanks for watching, and I'll see you in the next video.